and it's showing great resilience. You know, most of us have been conditioned to expecting the floor to drop out once it corrects, like we saw a few days ago. And here we are right back pretty darn close to where we were when before the correction. Today, gold is at, where are we at today? Let me just double check here. So we got gold up $22 right now to 29.20. Silver up just a little bit, just a tick or two at 31.82. Climbing back to where it was. The resilience is a very good word, but really what to me is very different. Again, as we've been talking about now for the better part of a month, is that traders on Comex are no longer rolling over their contracts. Many of them aren't, and that's really the difference. That's what enables this rehypothecated system to continue, because we don't stand for delivery, so we just keep rolling it over. It's a cash settlement, it's a speculation, or it's a hedge, but standing for delivery was something that never happened. And we started talking about this in 2020. I guess I'd rather be 5 years early than, 5 seconds late. And we were talking about how there was a slow bleed down of inventory and deliveries happening at an accelerated pace, which was really unusual at that point, like an outlier. Well, not so much anymore. In fact, contracts standing for delivery have led to an open interest surge of over 750%. Open interest meaning those that are standing for delivery. I guess to me, this raises the question, why are the traders and the nation states and the central banks suddenly standing for delivery? That should be something people are asking themselves. The folks that are standing for delivery are not something to be dismissed. These are very sophisticated traders. And at the same time, another strange occurrence is that the net long position on Comex is rising rapidly, while the short position is at its lowest since 2020. So being naked short right now when everyone is standing for delivery is akin to a mud wall in a rainstorm. Stupid, to say the least. We talked a lot about the contracts that stood for delivery last month. 15,691 contracts stood for delivery, 78.5 million ounces, second highest in Comex history. Another 4.6 million ounces of silver was taken for delivery on Friday, this last Friday, bringing the 20-day total to 41.2 million ounces. That's 4 times higher, at least, than any previous year in silver. Comex delivered 50 million ounces of silver on the first day March deliveries. But where is the media talking about any of this? Do you hear them? I don't. You and I do, and folks on your channel do. This is monumental. This is the same kind of environment where, why didn't the media tell us gold was reclassified as tier 1? The important things they're not telling us. Since December 2024, over 600 tons or over 20 million ounces have been moved into the vaults in New York City. This is an anomaly for sure. I find it interesting. We've seen 28 million ounces shipped from London since mid-December, yet now they say it's a T+8 week exchange instead of T+1 day, as it's supposed to be. And the question would be, if they were able to send 28 million ounces of gold since December of 2024, why all of a sudden are there delays of manpower and of trucks? It speaks more to me of a default than anything else. And we've talked at length about the massive amount of naked shorting in London, which amounts to 90% of all the trades are paper. And so, you have to wonder, is this targeting the Bank of England? Is this targeting the LBMA? Is it not as germane? Is it not as, a lot of people say, no, none of that stuff is, it's taking advantage of arbitrage. It's bringing gold home because there are people afraid of war in Europe. It's the Trump tariffs. It's, it's the Basel III. Maybe some of that is true, but could it be more? I don't know, but it just, the spidey sense tells me it's something more. But it appears that the London market for the past 2 months has been tapped out of bars, and they're trying to scurry to get more to deliver, or they're pausing because they're afraid that that's what ultimately will happen, kind of like Nixon did when he closed the gold window, figuring they're going to take all the gold, and then what? One thing that I found very interesting is the trend of bullion banks versus non-bullion banks. So the bullion banks being JP and Citi and Bank of America and Goldman. These are the commercial banks that are the major traders in bullion. 17.5 million ounces of silver was transferred from bullion banks to non-bullion banks here just a few days ago, making it one of the largest transfers in Comex history, but going to sovereign wealth funds, family offices. This could be a proxy for the PBOC. It could be a proxy for Saudi Arabia. We don't know who they are. Proxy for India, a proxy bank, or a proxy sovereign wealth fund, or a big family office that's set up here in North America and standing for delivery over the Globex. These are very unusual things, and people should be paying very close attention that these kind of players don't take 17.5 million ounces of silver just for the hell of it. This is way outside the norm. We've seen the same thing in gold with February contract. Same thing, massive delivery from bullion banks to non-bullion banks. Well, who are they? They're the others, that group, the others we talked about. Not really sure who they are, but we know that they're not bullion banks, but they're wealthy and sophisticated as hell. And that lends to conspiracy. Who could it be? Big money, to say the least. I would argue that, some people would say it's Fed proxy bullion banks are probably the biggest buyers. So, even the banks on behalf of the Federal Reserve, and they say proxy so that they're set up in a different way. A family office, a sovereign wealth fund, as I mentioned, some sort of a fund, a hedge fund, doing it on behalf of the Fed, could they? Or maybe on behalf of other entities. China, CTA, commodity trading advisors, are following suit. This is continuing to happen. Now, let's talk about, at the same time, what's happening in the marketplace. Kind of caught my attention, and of course I'll take any questions. These are just things that have caught my attention. The VIX on the stock exchange has moved up, surged above 20 for the 6th straight day. Since February 14th, the VIX is now up 45%. So you're seeing great volatility, not only in the crypto market, but also in the S&P. I find it interesting that hedge fund exposure to the Mag 7 is at a 22-month low. So all of these people that have been driven into the Trump trade, the risk-on trade, the AI trade, the hedge funds, again, the big money, it's at a 22-month low. We've talked about the insider selling, NVIDIA shares selling, Jamie Dimon selling, Bezos selling, Zuckerberg selling, 7-to-1 insider selling versus buying the hedge funds at a 2-year low. And yet all of this money that has ridden this up, what does that tell you for where it could potentially go when the big guys are leaving? And institutional capital is moving from risk on to risk off all of a sudden into gold, out of Bitcoin. Bitcoin, it's interesting. It's almost like a retail trap. They announced the crypto fund, and crypto's gotten killed since the last 2 days since that came out. It's like the old adage, buy the rumor, sell the news. I found it interesting that the Atlanta Fed has revised downward their GDP expectations to negative 2.8%. from 4% a month ago. Trump's going to get blamed for this, but they're saying growth is now going to be negative by almost 3% instead of positive 4%. That's not good. So these are the things that I think, at least from a standpoint of what I see happening, biggest money in the world is standing for delivery and rushing to get gold. London doesn't want to let go of the gold because it's massively rehypothecated. And the markets are massively overvalued. At the same time, every single metric that speaks of recession, is screaming, we're here, the uninversion of the yield curve, the record amount of money in money markets, the unemployment numbers going higher, the Claudia Sahm rule, all of these things have been triggered, and yet, I guess the way that they calculate a recession has changed so that we're not really in a recession yet. To me, it seems that we are very much so in a recession. We're seeing massive layoffs. And when you realize that government spending accounts for, 30% of GDP, when you're laying off all of these government employees and trimming the government spending, the fraud that was our GDP, it just seems that we're moving into a very dangerous time. I would call it high probability of stagflation. Inflation ain't going away, it's only getting higher, going higher. And at the same time, the prospect for economic growth, Atlanta Fed is telling you, is negative 2.5%, almost 3%. That's not good. That's stagflation. And that seems to me where we are going. But on another note, it just seems that there's big money is preparing for something that's coming, a massive shift into gold, a massive and silver, and grabbing it, taking possession, getting it out of the harm's way, while the insiders are dumping stocks and the public has rushed into it and into crypto. Is it a trap? Don't know. Kind of looks like it right now, but the world changes so fast. It's hard to tell one day to the next. But I would say that this is not a time to be a speculator, and the insiders, the big money, is telling you that.